What's up? What's up, family? How we doing? Yeah, so chilling out here, just enjoying some nature and shit. I'm out in Germany, but I wanted to do a video, basically just going over the possibility that there could be an AI bubble slash market crash. Well, of course, there always could be. I just wanted to discuss the theory and the idea that you got to be ready for some shit like this to happen. Okay? So, here, let's take off our system here. And when we think back, let's kind of just look back. So I kind of just want to look back in time. So there's been plenty of market crashes throughout history. And one of the most notable ones would definitely be, there's the 2008 housing crash, right? It was pretty brutal. But what was even more brutal than that was the tech bubble, which bursted, right? If we measure the drawdown, 83%. Goddamn. Pretty steep drawdown, okay? This is sort of a thing that I want you guys to realize is a possibility. And, okay, let's imagine this. It's the 2000s, right? And you're investing, especially if you're a young person. You're like, okay, I have 50,000 to invest. Like, let's go. Like, the market, like, you see this market, which is the NASDAQ. This is the tech index. You see it kind of top. Boom, it goes through a big kind of drawdown, which was pretty big to start out with. Oh, whoops. This was around 39, almost 40%. So this was already the start of a bear market. And you're like, okay, the market's starting to recover. Let's start to enter here. Say you enter with like 50K, right? If you take this whole drawdown, you entered here in your whole position, look at that. You're down 80%, right? So your 50K that you put in is not only worth 10K. And that's because you weren't ready for what could possibly happen, which is a market crash. And this is how markets work, and this can always happen to you. Now, AI has been going crazy recently. We're in sort of a really big bull market, Like in the past 3 years, 200% is crazy when it comes to a large index like this. Now, I want to kind of show how I would have handled this drawdown if I were trading my same system, which is the same system that I manage my clients' money with. So I'm giving away a lot of sauce here, but I just want to help you guys visualize how you can protect your capital in times of despair. So if we were to throw on the system we trade, which has really good edge and beats buy and holds in any asset that we trade, this is how we would have traded it. So let's start to kind of look what would have went down. So this is the back testing. We would have entered here in 99 in the summer, a little bit in August, added some more positions in October. So essentially our system utilizes the pyramiding strategy, so to speak. So as our position moves in our favor, we're adding to it and we're actually applying more leverage as we go up. So we added around 5 positions here, and then eventually we get stopped out because every time we enter a new trade or every time we essentially buy, the stop loss gets moved up. And this is designed in order to protect your risk. So as you can see, this whole drawdown was mitigated. As you can see, we had a losing trade down here, but we got stopped out around 3,500, and we were able to sidestep this whole drawdown, right? Now, this is pretty impressive, especially because when the market sort of bottoms out, we're without emotion entering back in just because it's a favorable time to get back in the market, okay? So this is a common theme with the content that I make, is that I sort of preface that logic and strategy is always better than emotion. Easier said than done, right? But this is how you would have been able to sidestep a huge drawdown. Because if you look at the trade we're currently in, if the market went to shit, then our stop loss is protecting our position. As you can see, we've been in since May 2025. And we've just been letting the market do its thing. Because when you invest in strong markets, you get paid for being exposed to them. You get paid for being exposed to strong markets. So the strong markets that you choose to be in, that's up to you. These are the current assets that we trade with our system, which of course I sell this same system. If you are interested and you want more information about it, just click the link below, and I have a lot of information down there about it. So these are the assets that I recommend people trade when they use the system. Now, gold is a really good asset as well. You know, nobody can argue that. And gold has gone through some pretty big drawdowns as well. So let's see how the system has mitigated drawdowns in the past on gold. There we go. So, okay, here's a really good one. Notice how from 2009 all the way to 2012, we are leveraged out the balls, just flooring positions in. And eventually we get stopped out at the top. And then we take all of the profits off the table. And then every time we enter, we're only entering back in with one position. So therefore, we've taken off all of our risk, and we're able to stay out of the market until it's a more favorable time to enter. So it's not perfect, but this is how you beat buy and hold, and this is the data, right? All of the decisions that I make in trading are all informed by data, okay? And this is with every asset that we trade. Same thing with Bitcoin. You know, we're able to mitigate these really steep drawdowns, which, like, for crypto is even, you know, more extreme. This one was a 77% drawdown, and this happens every 4 years or so, right? And this is the way that we're able to beat buy and hold consistently. Now, for other assets, for example, let's look at how the Stockholm index performed in earlier years. So this is a good example of the 2008 housing crash. As you can see, we took two losing positions here with very tight stop losses, one here. And then we're basically sidestepping most of this drawdown. And then we're hopping back in the market and we're flooring leverage positions on the way back up. And that's how we're able to beat buy and hold so consistently. Now, I want you guys to understand this, is that data is literally law. Like, think of it as, like, if you were a religious person, then think of it as your Bible, basically. think of it as your religious scripts. You follow them to a T, and if the religious scripts, and I'm not religious, by the way, so I'm sort of just talking out my ass here, but if the religious texts tell you to do something, I feel like as a religious person, they follow that, and that's the same way how you should like maneuver in your trading. So on the S&P 500, let's see how we sidestep some major drawdowns. Same thing with the 2008 crash. Boom. We're sidestepping this whole drawdown. We're basically getting back in 30% lower and then capitalizing off the next uptrend. And it's fucking sick. And we do this without emotion, without error. When you remove the human error, a computer and math, a good math equation can do its thing and you can let it run. It's kind of like letting if you have a really intelligent self-driving car, but it has a really rough terrain, which would be an example of human error, then it's gonna drive off the cliff, right? But if it has a straight landing chute, like almost like an airplane would, then it can go in that direction as fast as it can, and it can drive way better than any human can. And that's how I want you guys to think when it comes to trading. So start to code your system and have all the rules on paper, and this will allow you to just completely remove yourself, because a market crash could happen again, right? This could easily just go like, do a little bit of this, boom. Could come down, boom, boom. And it could go all the way, who knows, right? The market could do anything. You have to be ready for any certain scenario to happen. And so this is why I need you guys to understand that being prepared for an event like this isn't having anxiety, it's being prepared, right? Like on an airplane, when you're flying on an airplane, they have the oxygen masks, not because they think like the plane's gonna crash, but like, what if the 0.0001% chance that it happens, right? Then what do you do then? Like, you're fucked if you don't have those systems in place. So a 30% drawdown could easily happen, even more. And if your risk isn't being protected, then you're gonna blow up. Yeah, so this is how we're trading on the S&P 500. We just entered again here. So currently up 10%. The market is up 10%. And we've just entered here on the market and moved our stop loss to 7,300. So this is how we've been trading. And I give all these away in my channel. If you want to learn more about the system, then just click the link below. I could talk about this all day. So I'm going to close it here. But I love y'all. I hope you guys do well in your trading, and peace.